Assalamu alaikum warahmatullahi wabarakatuh. We all welcome you to the seminar series organized by the Muslim Majlis of University of Sri Jawaharlal. I am Muzman Nisar, and the topic today we are going to cover is the bank reconciliation statement. Okay, so bank reconciliation statement, bank account and the bank reconciliation statement. What means this? Okay, so we all know bank account is similar to the bank reconciliation statement. Okay, so bank account is similar to the cash account. Okay, so we all know cash book functions as a ledger account as well as a primary book. Same as that, bank account also functions as a primary book as well as a ledger account. Okay, so when considering to the main topic we are going is the bank reconciliation statement. Under that only we have issuing of checks, deposit of checks. Okay, so all those we have. So bank reconciliation, when considering about the bank reconciliation statement, it's not about correcting the errors. It's not correcting the errors, but it's like tallying with the bank account of the business. Okay, so when we are doing transactions with the bank, we also have a bank account maintained by the business. So what we do here is we just tally the bank account with the bank statement, because when doing transactions, all the transactions will not be, all the transactions sum won't be, or total won't be equal to the total of the cash book or bank account maintained by the business. So what we do is we reconcile it. We reconcile means we just tally it. We don't correct any errors. Here there are no error corrections or no corrections, but we just tally it with the business bank account. We tally the bank statement with the business bank account. Okay. So let's see. So I have prepared a small tute. Under that we have so here we have the definition of bank reconciliation statement. Bank reconciliation statement is a statement prepared on a particular date to reconcile the difference between the bank balance shown by the cash book or bank column and the bank balance shown by the bank statement. So it's just to reconcile or tally. Okay, so there are some double entries we should know. First of all, deposit of cash in the bank. When we deposit cash, okay, let's say we are in a business and like we are going to deposit some amount of money in the bank. So cash will be going out from the business. Whenever you are doing a business transaction, you should think that you are the business. Okay, think that you are the business and go into the transaction. Think when depositing cash, what you are doing, cash is going out from you. You are the business, so cash is going out from you. So cash book will be credited, and then automatically the bank account will be debited. Okay, so we can do like that. And when depositing checks, so there's no difference between cash and checks. Okay, checks are used instead of cash. So same thing applies, same double entry applies. When depositing of checks, checks are going out from you, same to cash, similar to cash. So cash book credit, and again bank account goes with the debit. So when you are issuing checks, okay, when you are issuing checks, okay, this is like paying and settling an expense. Okay, so when checks are issued, expense account or the relevant payment account will be debited. Why? Now the money is going from your bank account, because you can't issue checks from your business cash book. So you should have a current account. Then only you will maintain a bank account. When you are issuing checks, then it's going from your bank account. The money is going from your bank account. So bank account will be decreased. Then the bank account will be credit, and then the expense account or the relevant payment account. For example, let's say you are paying a creditor, then the creditor's account will be debited. Or let's say you're paying an electricity expense or telephone expense or insurance expense, then the expense account will be debited. When dishonoring of checks, so check will be dishonored in certain circumstances. There are certain circumstances when a check gets dishonored. Okay, for example, when there's no sufficient amount of money in the current account holder's account or bank account holder's account. So let's say you have issued a check for about 100,000 and you are having only about 10,000. So in that case, if you have overdraft, the bank will allow some overdraft facilities. But if that overdraft is also not like tallying with that or not like enough, then your check will be dishonored. So if the drawer of the check, for example, the current account holder has told the bank to not pay the certain amount to this person, then the check will be dishonored. Also, there are many other circumstances where the check will be dishonored. Okay, so in this case, what are the double entries? Okay, let's say your this deposited check is dishonored, then the debtors or relevant account. Okay, normally we get received checks from debtors or other accounts. So those checks will be debited. Why? Like vice versa of this particular. Okay, vice versa of this particular thing. This particular double entry. Okay, so here let's say dishonor debtors or relevant account debit, bank account will be credited. Why? Earlier we debited the bank account because we like thought we will receive the money, but the check has been dishonored. Okay, so now we should like reduce the amount from that account. So we credit the bank account, and the relevant account is always in the debit side. Okay. Next one. When considering about the dishonoring of issued checks, sorry. When considering about the dishonoring of issued checks, okay, let's say when you issue a check, you normally credit the bank account here. When you issue a check, we credit the bank account, but in this case, we don't have, or we didn't pay the check, we didn't pay the certain amount to the check, then in that case, the bank account will be debited, and the expense account here, we debited the expense account, the expense account here will be credited. Why? We didn't pay to the like particular person, or particular expense was not covered. Okay, so that's what the basic things we have, and other than that we have unpresented checks, unrealized checks and all. So unpresented checks, all those will come when we consider about the bank reconciliation statement. So here I have given some, I have inserted certain images about unpresented checks and other things, basic items. Okay, so and there are some other specific things like direct remittances, standing order payments, bank charges and all this comes into play when we all like reconciling the bank statement. Okay, so what means standing order payments? Standing order payments means like, let's say you are maintaining a business. Okay, let's say you're maintaining a business, and you get certain bills which you should pay monthly, or like for a certain amount of period. Let's say every 3 months you like certain pay a certain bill or something. Or let's say, let's take the electricity bill thing. Okay, you're paying electricity bill every month. Okay, now it's like a burden for you, or you think that you no need to pay like every month. Let's say the bank to pay. Okay, and you are starting to pay, like you have informed the bank to pay, let's say let's take 10,000. Let's take 10,000. Let's say they are going to pay 10,000 electricity bill every month, and you inform the bank to pay 10,000. What the bank will do is, until you tell the bank to stop, the bank will be paying every month. Okay, every month the electricity bill. Okay, that is known as standing order bills, standing order payments. The regular series of payments by a business which are instructed to the bank in advance, and the bank acts accordingly on regular basis. Okay, let's say you have told the bank to pay the electricity bill every month, then the bank will be paying 10,000 every month, and that will be added in your bank statement. But sometimes in this situation, you may not know whether the bank has paid or not. So you won't record this in your bank account. You won't record this in your business bank account, but the bank has recorded it in the bank statement. Okay, so that is known as standing order payments, the regular series of payments. Also, bank charges means the bank may charge the business for certain services it provides. It provides and not inform about formally. Okay, so this is the charge, but for the services provided by the bank, for the service, this is the charges the bank like charge for the services provided by them. For example, let's say if you're maintaining a savings account, they'll charge for you like for providing the message services, like all the online services Like that, when you maintain a current account also like for the services they provide, they charge it. Okay, and the direct remittances we know, here it is known as credit transfer. Okay, this is when a debtor, okay, this is when a debtor who has to pay you a certain amount for a previous transaction, and he directly deposits the amount to your bank account. Okay, without informing you anything, he directly deposits the amount. Let's say, for example, a debtor has to give you 10,000, and without informing you, he has transferred it to your bank account. Now it will be a direct remittance. Understand? Do you all have any doubts until that? Okay. So moving on. What are unpresented checks? Unpresented checks issued by the business, but it's not presented by the bearer of the check. Okay, let's say you have issued a check. Okay, you have issued a certain check. For example, let's say you have issued a check for about 20,000, and you have given the bearer, but the bearer has not gone to the bank and encashed the check. He has not received. He has not taken the check, taken the money, so amount of money for the specific check. So these kinds of checks will be known as unpresented check. Why? The check has not been presented by the bearer or the payee of the check. Understand? So bearer and payee both are same. So it is not presented by the bearer or payee. So the bank has also not, bank always does not know. So if the bearer goes and encashes the check, it will be recorded in the bank statement. In this case, he has not presented, so the check is not like it is considered as unpresented checks. Okay. Next we have uncredited. Okay, so we normally call it as unrealized checks. when in this situation, unrealized checks means we have received the check and we have deposited checks received from the debtors or customers and sent to the bank, but not credited in the business bank account. Okay, in this situation, we have received the check from the debtor, we have deposited it in the bank, but the bank has not deposited the money in our account. That's the situation. Okay, the money is not credited in our account. Still, the money has not been credited to our account. That is known as unrealized check. The check has not been realized by the bank still. We have deposited this check we received from a debtor. We have deposited the check, but the bank has not realized it. Understand? Okay. Next one. So here's the format of the adjusted cash book. When we prepare the bank reconciliation statement, there's only two things we should prepare: adjusted cash book and the bank reconciliation statement. So basically for all levels, we don't get many transactions. we will get dividends, bank charges will be there, direct remittances will be there, and yeah, in the bank reconciliation statement, we will have unpresented checks, unrealized checks, and the other things that we have to calculate: the balance as per the adjusted cash book and the balance as per the bank statement. Okay, so here we have to add the unpresented checks. Unpresented checks, it will be normally in the credit side of the bank account. Whatever we prepare, not in the adjusted cash book, but in the bank account, it will be always in the credit side. And unrealized check, it will be always in the debit side. So if you have any doubts, or if you are not like clear with that part, you can just go and see the credit side of the bank account. Then you can like recognize it as unpresented checks. And if you, other than that, all the checks which have not been realized, the bank statement which are in the debit side of the bank account are known as unrealized checks. So, moving on to questions, then that should I explain it? This one, checks. Yeah. Okay, let's move on to some questions provided in my queue. Let's try some questions. First of all, we have prepare the bank reconciliation statement for the month of March 31st of March 2020. Okay, so here the credit balance, there's an overdraft balance. Okay, I didn't explain the overdraft situation still. Okay, so overdraft is a facility which is provided by the bank for a current account holder. Okay, this is only provided for a current account holder to go up to a certain amount. Let's say, for example, this is your bank account, and you have, let's say, 100,000 in your 100,000 balance in your bank account. Okay, 100,000 balance in your bank account. And okay, overdraft facility is, let's say you have issued a check. Okay, you have issued a check of 150,000. Check 150,000. Okay, overdraft. Okay, bank account. You have issued a check of 150,000. In this situation, you have only 100,000. You have issued a check of 150,000. Why have you issued? Because bank has provided you a facility called overdraft facility. You can pay a certain amount. The bank will provide you a certain amount. For that range, you can pay. So the balance will be a credit balance. See, when you balance off, you have 150,000. 150,000. Okay, so the balance carried down will be 50,000, and the credit balance brought forward. Okay, balance brought forward will be 50,000. So when you have a credit balance, when you have a credit balance in the bank account, specifically bank account, not any other accounts, the bank account, we call it as the overdraft balance. Okay, now let's take this situation. The first question, okay, prepare the bank reconciliation statement for the month of March 31st, 2020. Is the board clear, or should I make it more like some more closer? Is the board clear?
Yeah.
Is the board clear? Board clear? Huh?
Yeah, fine.
Okay. Okay, so let's move on with the first question. Okay, here you have to prepare the adjusted cash book and the bank reconciliation statement. Let's say we have, in the first question, they have asked only the bank reconciliation statement. So we have the format of the bank reconciliation statement. And first of all, what we have is balance as per the adjusted cash account or adjusted bank account. Okay, so they have given here. Okay, as per the cash book, the balance is 145,000 credit balance. See, this is very, very important. Okay, overdraft balance or credit balance, they'll give in the exam. Okay, so normally you all don't get overdraft balances, but here we should be very keen on this. We should like consider this very much. Okay, credit balance overdraft, here they have given as this. So we should write 145,000 and 45,000. We consider this in bracket. We write this in bracket. Why? Because it's a credit balance. Okay. If there's a debit balance, we add that. If there's a credit balance, we subtract. So to subtract, we should include that in the brackets. Okay. And then we have check deposited but not yet collected. So what will be that? So when we look at the word deposited, then itself we can recognize it as deposited but not realized checks. Okay, so those checks we subtract, be less. Okay, be less unrealized checks or checks deposited but not realized. Okay, and then we add unpresented checks or checks issued but not presented. Okay, so these things you should be like very clear in these situations, what you subtract and what you add. Okay, so we have to add here. Okay, add unpresented checks. So first of all, we have a deposited but not realized check. Okay, so let's include that in the next part. Okay, let's subtract check. We don't have a check number, so we can just write check 72,000. Okay, we can include that in the bracket as 72,000. Okay, next question, next part we have check issued but not yet presented for the payment. Check issued but not yet presented for the payment. So I told you, whenever an unpresented check or issued but not presented check, it should be added. So whenever we see this, we can write it as an addition. Okay, what's the value? 52,800. So as we should add this, we don't include this in the bracket. Okay, whatever we should subtract, when we include those in the brackets. Okay, next one we have bank charges 2,500. Customer directly deposited 45,000 interest. Okay. So if they have asked only to prepare the bank reconciliation statement, you should only prepare the bank reconciliation statement. Okay, you should only include what should be included in the bank reconciliation statement. There may be other things. Okay, so the question requires prepare the bank reconciliation statement for the month. Okay, they have given all the things. Okay, you should prepare only the bank reconciliation statement. Okay, so here when we consider this, okay, so when we should add this 52,800. We should subtract this because this is minus addition. $92,200. 92,200 in brackets. And we take the 72,000 here. And the total would be 164,200. 164,200 within brackets. Okay, so keep in mind the brackets. Okay, and this particular thing we call as balance we call as balance as per the bank statement. Okay, this one we call as balance as per the adjusted cash account, and here we write as balance as per the bank statement. Okay, that's the first question. If you want, you can copy. I can give a time for you all to copy. Like, if you all want a time to copy, you can please still include in the chat. Or you can unmute yourself and Do you all want a time to copy? Any doubts in that question or any clarifications regarding that question? Okay, then let's move to the next question. Okay, so here we have from the following particulars of Rasandu and Co. Prepare the bank reconciliation statement. Okay, here also we have to prepare the bank reconciliation statement only. Okay. So we know the format of the bank reconciliation statement. Okay, and then so let's prepare it. Balance as per the it's debit balance. That's a debit balance. So here we should just write. Okay, no including in brackets or anything. We should just write 46,500. Okay. Next we have bank charges. So they have required only bank reconciliation statement. So no need to prepare the adjusted cash account. Their requirement is only to prepare the bank reconciliation statement. Okay. So next one we have bank charges. So that's not included. Insurance premium, that's a standing order payment. So I explained you about the insurance, like standing order payments. So insurance premium also comes under that. Okay. Next one we have checks deposited but not realized. Okay. So we have and then this. Okay. Checks deposited but not realized. Okay. What's the amount? 15,500. There's no check number. So we just write check 15,500. And then next we have check issued but not presented. Checks. We can write unpresented here. Unrealized. Okay. For your further clarifications of for understanding everything. Okay. So checks and we can write 16,000 here. 16,000 we add. So we don't include that in the brackets. Okay. Then we have to close this. Take the 16,000 here and then 15,500 here. Okay. The amount would be 46,000, 62,500. Here 62,500. Subtract 15,500. The amount would be 47,000. Okay. So this amount is considered as balance as per the bank. Okay. So any doubts? Any doubts till now? how to draw a bank account. Okay. Yeah. First of all, any doubts in this? I'll explain that. Any doubts in this question? Are you all clear, or do you all have any doubts? The question that I did now? Clear. Okay. So drawing a bank account is not a big thing. The normal ledger account that we draw is the bank account of our business. Okay. There's no special thing how we draw a cash book. Okay. Bank account is similar to a cash book. Okay. There's no any other differences between those two. Bank account and cash book are similar. The only thing different is cash book is maintained in the business. Bank account is maintained somewhere else. Okay. That is also maintained by the business, but the money is in the bank, not in the business. That's the thing. Okay. Money is not in the hand, but in the bank. That's the bank account. Okay. So bank account we prepare like this here. The normal ledger account that we prepare, date. Okay. Date. Description. Ledger folio. And then value. And then again date. Description. Ledger folio. And then value. So this will be the credit side and this will be the debit side. This is the bank account. Okay. If you want, you can copy down. Okay. Shall we move to the next question? If you all have finished copying down this, yeah, we can move. I have uploaded the tute in the chat. You all can download it. The specific tute which I am doing now, you all can download it and see. Okay. So you all can move on with the questions which I am doing. Okay. So now, without going further, now let's do some like this. Yeah. Now we are getting a question like this. Okay. In this case, what we do? Okay. Let's take this question. Okay. We are having a question like this. Okay. Basically, for your all-level questions, I guess your questions will be coming like this. There are like rare situations where questions come like this. Okay, in this format. Always the questions come in this format. So let's focus about two questions in this format. Okay. Now they have given the cash account. Okay. Also, they have given the bank statement. Okay. In this situation, what we do is we should just check both the statements, both the cash account and the statement which they have given. Why we should check is because some transactions included in the bank or cash account will not be there in the bank statement, as well as some transactions included in the bank statement. Okay, for example, let's say some transaction included in the bank statement won't be there in the cash account or bank account. So we should check and we should mark those transactions. Okay, let's say okay, let's take this now. 1550. I'm going like looking through this thing. Okay. Okay, so this 1550, it is there here. It is named as checks. Okay, so we put a tick here. And then Dilshad, 1890. Do we have that? 1890. It's there the credit side. Okay, so again we mark a tick here. And also we can mark a tick here also. Understand? Tilini, 2110. Do we have that? No, we don't have that in the bank statement. So what we do is we just can draw a star here and then keep a dot or something, like we should record this. Okay, we should have a star mark or something. We should mark that we should record this. Okay, and then we have here the balance brought forward. Okay, that is also there. So that is also done. And then Ayesh, 2060. Do we have a certain amount? Ayesh, we have 2060. So we mark it correct, tick, okay. Then Ramesh, 3150. Ramesh is also there, 3150. It's also done. And then we have Ishan, 840. Do we have 840 here? Do we have 840 in the bank statement? No. Then you should mark it. Okay. We need to mark it. Ishan, 840 is not recorded in the bank statement. Okay. So these are checks. Okay. All these names given here are checks. So now we have checked. We are done with the cash account. Okay. Cash account is done. And we have got the transactions which are not recorded in the bank statement. Only these two transactions have not been recorded in the bank statement. Now moving on, okay, moving on to the bank statement, we have only checked 4 transactions. Okay, there are 3 other transactions. Okay, so we should check whether these transactions are recorded in the cash account, the particular cash account which is here. Okay, so let's see insurance. Is there an insurance transaction? No, it's not recorded. So we should record that. Okay. Next we have direct remittances or remittances. 1800. Do we have 1800 here? Balance carried down need not be recorded in the bank statement. Okay. Balance. Were you all able to do the sum? Shall we check? Okay. So what's the requirement is they have required to prepare the adjusted cash account. Okay. Let's draw the full format. Okay. Date, description, ledger folio, and then value. Again, date, description, ledger folio, and then value. Okay. Adjusted cash account. Okay. Portfolio. Value. Okay. Now let's do. Okay. With that, we'll draw the format of this also. Bank reconciliation statement. Bank reconciliation statement. Okay. So we have a debit balance here. How much? We should take this balance. Okay. So when you are preparing the adjusted cash account, we should take the balance carried down. Okay. They have not given the balance brought forward. So normally they should give the balance brought forward here. So when preparing the adjusted cash account, we should take the balance brought forward. Okay. I will try to include it. Balance brought forward. Okay. 39,220. 39,000. Okay, so they should give the balance brought forward here. Okay, so here also let's see, there's a credit balance, right? The balance brought forward. Normally in a cash account, okay, what's the balance? What's the side of the balance we get? Normally we get the debit side. Okay, in a cash account, because the cash, okay, cash is an asset. When it is increasing, when cash is increasing, we get a debit balance. Okay, so whenever we get a balance in a cash account, we always get a debit balance. But in this case, look carefully, we have credit balance. Okay, the balance carried down is in the debit side. Okay, and the balance brought forward is in the credit side. So we have a credit balance. So this means this is also an overdraft balance or credit balance. Okay, so let's take, okay, so we have a credit balance, we take the balance brought forward. Okay, balance brought forward amount 39,220, and we write balance brought forward. Okay, balance brought forward 39,220 here. And then we have what are the transactions. Okay, now we should look what are the transactions that have not been recorded, in the bank account, sorry, cash account. Okay, so we mark these three transactions, right? Insurance, remittances, and bank charges. These three transactions are not recorded in the cash account. So in the adjusted cash account, what we do is we record these three transactions only, not any other transactions. In the adjusted cash account, we record what are the transactions that have not been recorded earlier in the cash account or bank account. In the adjusted cash account, we record the transactions which haven't been recorded earlier. Okay, for example, let's say, do we record Dilshan again? No. Do we record Ayesh again? No. Do we record Keshini again? No. What are the transactions which are not there in the earlier cash account are recorded in the adjusted? We are just adjusting it. So that's why we took the balance brought forward. Here, this balance brought forward was taken. Understand? That's why. Okay, so see, now we have insurance. Okay, insurance, it's a payment for the business. Okay, it's a standing order payment. So whenever we have an expense, we record that in the credit side of the cash book. So insurance, the amount is 2,000 rupees. Sorry, 2,000 rupees. Then we have remittances. So direct remittances, we have remittances, we have 1,800. Okay, and then we have bank charges. 650. Okay, now we should balance this. Okay, 39,000, 41,000, 41,800, 41,870. Okay, this is the new balance. Okay, so balance carried down will be the debit side. Balance carried down. So 40,070 will be the answer, right? Yeah. 40,070 is the new balance. So balance brought forward written here. 40,070. Okay. Did you all get that? Did you all understand? Any doubts for the adjusted cash part? This part, do you all have any doubts? Okay. Okay. Now let's do the bank reconciliation statement part. Okay. So what do we record in the bank reconciliation statement is the statement, the things which were not there in the bank statement. First of all, you were checking, right? All these things, these are there in the bank reconciliation statement. There are some things, see, there are some transactions. Tilini, her check amount is not there, 2,110. Ishan, his check amount was not recorded in the bank statement. These things, these transactions only are recorded in the bank reconciliation statement. Okay, there's no error correction. We are just tallying it with the bank account. Okay, Now, first of all, how do we start? Balance as per adjusted cash account. So here we don't take the balance of this account here. This balance 39,920 won't be taken. Okay, 39,920 is the balance before adjusting the cash account. The balance which we take is this balance. See, this is the balance we take now. 40,070 is the balance which we take as the adjusted cash account balance. Understand? Balance as per the adjusted cash account. So this is the adjusted cash account, and this is the balance which we take. Okay. Then moving on, we have to add unpresented checks. Okay, add unpresented checks we have, and then less unrealized checks. That's our format. Okay. So let's see. I have told you. Okay, in the beginning of the session, I told you if there is a check in the debit side of the cash account or bank account, let's say cash account also can be known as bank account. Okay, so there's no difference between these two. And cash account is similar to the bank account. Okay, so if there is any transaction or any check in the debit side of the cash or bank account, we name those as unrealized check, and that is not in the, if that is not in the bank statement, we name that as unrealized check. Okay, and if there is any check transaction in the credit side of the bank account or cash account, and that check transaction is not recorded in the bank statement, okay, in this bank statement, if it is not recorded, we name those as unpresented checks. Understand? Did you understand? Is how to get the unpresented and unrealized check from the bank account. Okay, so now let's do it. Okay, unpresented checks we have. Okay, first of all, unpresented checks. The only person with the unpresented check is Ishan. Okay, unpresented check, we have a name Ishan. Okay, and his amount is 840. Okay, and then unrealized check, we have Tilini. Okay, the debit side we have Tilini, 2,110. Be careful with this. Unpresented checks, we always add an unrealized check, we always subtract. Okay, so Tilini we have 2,110. Okay, we include those in the. Okay, now we just add it 840. It will be 40,910, and then here we subtract 2,110. Okay, it will be, wait, 38,800. 38,800. Okay, this is the balance as per the bank statement. Okay. So we have I'm really sorry. Okay. So we have a debit credit balance here, right? So I don't include that in the brackets. So there was a fault done by me. Okay, really sorry. Because there was a credit balance, we should include that in the brackets. Okay. So it's my fault. Okay, we have this 840 and then 2,110. Okay, 840 we subtract. Then it's 39,240. Okay, and then okay, this is in bracket, and then we add 2,110. Okay, 41,340. This is the answer. Clear? Just copy it down and tell me if you understood that. Okay? Because there was a mistake done by me. I didn't include this in the bracket. So now I corrected it. Okay. Just let me know whether did you all get it or should I do it again? If you all didn't get it, I can do it and show again. Was that clear? How I got this 40,070 was from the adjusted cash account new balance. And this because this is a credit balance. Okay, we have the credit side credit balance. We include that in the brackets. Okay. So from that we have to add unpresented checks. So we added because this is minus, we get a minus answer. And then we minus or subtract unrealized checks, we minus it. So minus minus plus. Then we got the answer 41,340. Is that clear? Okay. So now we got the answer, right? So now there's a way we can check. Okay. There's a way if they give in this format, okay, in this tabular format, if they give the question, there's one way we can check whether our answer is correct or not. Okay. We have 41,340, right? Huh? Now check the bank statement. What's the last balance we have? What's the last balance we have? 41,340. So if your answer tallies with that, if your bank reconciliation balance, okay, if your bank reconciliation balance answer tallies with the bank statement balance, then your answer is correct. You can guess it. Okay, you can get your answer correct. Understand? Did you all get it? Just check whether your answer is tallying with the bank statement balance. So if you get that, you can make sure your answer is correct. So if you don't get it tallied, you can guess, you can understand, or you can know that there's something wrong, and then you can recheck the question, or you can recheck the way you did it. Okay. So now let's do this question. Okay. I can give you 5 minutes for you to try this question to just check what are there and what are not there, and then like give a try. I'll give you 5 minutes. Shall we try? Okay. So we have they have given the cash account and the bank statement again. So the requirement is to prepare the adjusted cash account and the bank reconciliation statement. So we have to prepare the adjusted cash account and the bank reconciliation statement. Okay. First of all, let's draw the format of the adjusted cash account. Adjusted cash account. Okay. So date, description, ledger folio, value, and then date, description, ledger folio, value. Yeah. Okay. Let's also prepare the bank reconciliation statement. Let's see. Now let's see what are the things there. Okay, good. Good. So if you have tried, it's good. Okay. So let's see what are the things there. Okay. So when taking this, okay, balance brought forward, it's 20,000 is there. This is there. Okay. Here 20,000 is there. And then cash deposit 50,000. Let's go in the debit side. Okay. Let's first of all check the debit side. Cash deposit 50,000. It is also there. 50,000 is there. Okay. Check 800 912. Check. Is this check there? 800 912. Check number. No, this is not there. So we should mark it. Okay. And then next one. Cash deposit 40,000. Do we have that? Cash deposit 40,000. Yeah, we have it here. Cash deposit 40,000. So this is also there. So we have this. So we have it. So we don't need that. Now moving on to the credit side, check 500221 10,000. Do we have that? Yeah, we have that check. 500221 we have. So we mark it. And again 500222 30,000. Do we have that check? No, we don't have that check. So we should record it. So we mark it and keep. Next one 500223. Yeah, we have that check here. So we mark a tick here. Okay. Next one 500224. Do we have that check? No. So we should record it. Understand? So we mark it here. And then we have, yeah. So there's a debit balance in this. So there's no issue. No need to record in brackets or anything. There's debit balance here. Understand? And then moving on to the bank statement, let's take what are the transactions included in the bank statement are not there in the cash account. Okay. So we have checked this one, direct deposit. There's something called direct deposit. Do we have that in the bank's cash account? No, we don't have. We have only cash deposits here. So we don't have that. We should record it. Okay. Next one. Insurance premium. Do we have that insurance premium here? The credit side? No, we don't have that. So we should record that again. So mark it. And then we have bank charges. Do we have bank charges? No, we don't have that. So we should record that. Okay. So we have marked it. Now what we have to do is we have to prepare the adjusted cash account and the bank's reconciliation statement. Okay. Let's prepare. Okay. So before that, while doing, did you all get any doubts? Do you all have any doubts while doing this one? While you were trying? Did you all come across any doubts? Okay, good. Okay. Now let's see this. Okay. So we have a debit balance. So we record it here. Balance brought forward. Is 70,000. Okay. 70,000. And then we have this one. Direct deposit. Okay. Again, I'm telling whatever the transactions which are not included in the cash account of the business only should be recorded in the cash account, adjusted cash account. So the transactions which are in the bank statement and which are not in the cash account only should be recorded in the adjusted cash account. Okay. So let's take from here direct deposit. So direct deposit means a debtor has deposited to our account without us knowing. Okay. So we won't include that in the cash account. So we are going to include now. Direct deposit is 20,000. Okay. And then we have insurance premium. This is a standing order payment. So insurance we have. Insurance we have 8,000. Okay, the value is 8,000. And then we have bank charges always in the credit side. Okay, so standing order payments and bank charges always it will be in the credit side. Okay, so because those are expenses, it will be in the credit side of the cash book. So it's 2,000. Okay, now let's balance. So here it's 90,000. 90,000. So the balance carried down. Balance carried down will be, it's 10,000 here, 80,000. And the balance brought forward. Brought forward will be 80,000. And the balance is a debit balance. So no need to include any brackets or anything. Did you understand until this cash book part? Now let's move to the bank reconciliation statement part. Okay. So what is included? What should be included? First is balance as per the bank adjusted cash account. Okay. So balance as per the adjusted cash account. So what's the balance? 80,000. So debit balance, no need to include any brackets or anything. And then we have to add unpresented checks. And then less unrealized checks. Okay. So we should check whether we have these transactions. If we don't have, we just ignore them. If we have, we should record. Okay. So let's see. So these checks can be found in the cash book because we are going to adjust the bank statement. So these checks can be found in the cash book only. Okay. So as I have told you, unrealized checks can be found in the debit side of the cash book, and unpresented checks can be found in the credit side of the cash book. So check number 800912, it's not there in the bank statement. So we should record that. Okay, that's an unrealized check. Check number. So if we have the number, we should write, okay. 800912. What's the amount? 30,000. Amount is 30,000. And then we have unpresented checks, okay, only that thing in the debit side. And when moving to the credit side, check number 500222. Check 500222. What's the value? It's also 30,000. We record that. Also, we have another check here. This check is also an unpresented check because we don't have this value in here, the bank statement. So we record that again. Check 500224. The value is 20,000. So we take the total here 50,000, the addition of these two, and then add 130,000. We get the answer 80,000 plus 50,000. So we have to subtract this because unrealized checks. So 30,000 we subtract from here, and total we get 100,000. Okay, this balance is known as balance as per the bank statement. Okay, now I have got my answer. Now I am going to check. Okay, so let's see the bank statement. Let's take the bank statement. Okay, the bank statement, the last balance is 100,000. So my answer is correct. Did you get it? Understand? Any doubts? Okay. So here, give me a second. doing a small editing part because the question is not correct. Okay. Hmm. Yeah. Now let's do this question. Okay. This question they have only like required the bank reconciliation statement. I included the adjusted cash book also. Okay. So let's see. Okay. Let's do this question. Okay. So the cash book has a debit balance of 56,500, and they have given the other transactions also. Okay. So what are the other transactions? So if they give like this, then we don't have a way to check. Then we should do very, very properly and very like we should be keen on what we are doing. Okay. So bank charges. Yeah. We have bank charges 15,000, insurance premium. This is a standing order payment 15,000, checks deposited but not credited. Okay. So this is an unrealized check, checks issued but not presented, unpresented check, wrong credit from bank account. Okay. So that's a wrong credit. So sometimes some transactions will be there which has been credited to your bank account. Credited means you have received the money, but it's because of an error. That money should not be like credited to your account, but because of an error, it has been credited to your account. So you should debit it. Understand? So you should return the money. So that should be done. Direct deposit by a customer into the bank, 60,000. Direct deposit. Interest credited by the bank. So interest received, 3,000. Direct payment by the bank not entered in the cash book. Direct payment again. That's a standing order payment, 40,000. Dividend collected by bank. Okay, but not entered. So that's also direct remittance. So these are the transactions we have. Now we have to prepare the cash book, adjusted cash book, and the bank reconciliation statement. Okay. So let's move on and prepare. Adjusted cash book or cash account. Okay, debit side and the credit side. Date, description, ledger folio, value. Date, description, ledger folio, value. Okay. And then we'll also prepare the bank reconciliation statement. Okay. So we have prepared that. Now let's see. Okay. So first of all, we have a debit balance, 56,500. So balance brought forward is 56,500. Okay, it's 56,500. And then we have bank charges charged by the bank. Okay, bank charges always the credit side. Bank charges 15,000. And then insurance premium, that's a standing order. Insurance 15,000. Okay. Next we have checks deposited but not presented. That will be coming under bank reconciliation statement. Wrong credited to firm account by the bank. Okay. So this one. This was an error. Okay, this was credited to your account. Okay, so here what you should do is, if it is credited to your account, you should again return. Okay, it should go away from your bank account. So bank account plays the role. Okay, it is similar to the cash book. Understand? Bank account is similar to the cash book. So when money is going out, what would you do? You normally credit in the cash book. Okay, so bank account is also the same. So when money is going out from the bank, okay, when you issue checks, so when money is going out, you credit it here. Okay, so let's name that as wrong credited return money. Okay, returns, let's say returns, what's the amount? 12,000. 12,000. And then direct deposit by a customer. Direct deposit. Direct deposit goes 60,000. And the interest credited by the bank. So interest, we have received an interest. So interest 3,000, but not recorded in the cash book. So we should record in the cash book. Okay. Direct payment by the bank not entered in the cash book. So a payment has been made by the bank, but not recorded in the cash book. So we should record. Okay. Another payment, direct payment, let's say direct payment. 40,000. 40,000. Okay. And then we have dividend collected. So we have received the dividend. Dividend collected 15,000. Okay. Now what we should do is we have to balance the adjusted cash out. Okay. Uh, 110, 115, 118, 124,500. 24,500. 24,500. Okay. So it's 30, 70, 82. 82 means 6,500. And 34,500. 56,500, 60,000, 8,000 and 15,000. Okay. So 134. And then we have 70, 82. 134, 500 minus 82. 52,500. Okay. So balance carried down is 52,500. And the balance brought forward. Okay. Balance brought forward is 52,500. Understand? Did you understand this part? Any doubts until this part? Any doubts until this part? Adjusting the cash account. Okay. So let's move on and do the bank reconciliation statement. Because we have balance, okay, debit balance as per the adjusted cash account. We have 52,500. Okay, because it's a debit balance, no need to include in brackets. Okay, if there is a credit balance, it's a must. Okay, must means if you, because to show it as a credit balance, you should include in a inside a bracket. Okay, and then next we have add unpresented checks. Unpresented checks, we have checks issued but not presented. The amount is 56,000. Okay, unpresented checks. We have 56,000. Yeah, and then we have less unrealized checks. We have checks deposited but not credited 60,500. 60,500. So include that in the bracket. So 56,000. Total you will get is 108,500. 108,500 minus 60,500. The answer would be 48,000. Okay. The total is 48,000. So this is the balance as per the bank statement. Did you understand? If you want, you can copy down this. After finishing it, copy down. Okay, very good. So, any doubts? Do you have any doubts in this session regarding a bank account, deposits, and this thing, bank reconciliation statement? Okay. Then we can conclude our session. Jazakallah for joining. Mr. Nana, any information to tell?
Yeah, Uzma.
Shall I conclude the session?
Okay, okay.
Jazakallah. Jazakallah for joining, and then let's conclude our session.